Yeah, now we're talking. Now we're talking a fantastic day today. Now you know why we love range ball markets, right? Trade that rotation back and forth. I know a lot of you guys made some good money today, so well done on that. But now let's get back to work tonight. Refocus. Big earnings just came out. We got some fresh ranges on the charts for us here tomorrow. And I'll tell you, with Jerome Powell tomorrow afternoon, we got more big earnings tomorrow. Something tells me traps, bull traps, bear traps are probably where the big easy money is made here for tomorrow. And I have some great traps on my radar for tomorrow. And as always, I'm going to cover my favorite trades. Definitely got a bunch of traps on my radar that way you guys have a game plan to make some money on Wednesday. Now, before we jump in and get the party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And if you like these lessons, if you like these videos, do me a favor here tonight. Give me a thumbs up here in the video. Give me a hell yeah down in the comment section below. Either way, thank you so much for tuning in, supporting the channel. Boy, it's been a great week so far. Let's keep these good times rolling into hump day on Wednesday. Now, let's start first tonight, of course, on the 60 minutes. I got my NASDAQ and the triple Qs, my E-mini and my SPY. The 60-minute charts right now are, well, we're definitely bearish still, right? We're definitely not a bull market here right now. But what I can tell right now is it looks like we're dealing with a tale of two trading ranges. We got a range above us, and we're pretty much in a range right now. Range above us in the NASDAQ, in a range right now. The current range we're in on both the NASDAQ and the S&P, like we talked about last night on the video, ranges love to rotate. So we're buying low, selling high, buying low, selling high. Lots of reversals and lots of trap opportunities on that range. Most importantly, though, we think about that previous trading range we came out, late last week, right? What do we know about ranges? They love to break out, pull back. Ranges love to break out, pull back. So I'll tell you, you put both of those together, right? You mix together the short-term range we're in right now with that previous range, and you've got some great breakout pullbacks, some great bull traps, some great bear traps, and we're going to drill down in a moment here to our tick charts and talk about the entry tactics to capitalize on what I think will be plenty of traps with Jerome Powell tomorrow afternoon and big meta earnings tomorrow as well. Now, before we dive in and talk about entry tactics here, let's all get on the same page though first here, because there are three things you want to be aware of here for tomorrow. First of all is home sales. We get home sales coming out at 10 o'clock Eastern time. Remember, anytime we have major news at 10 o'clock Eastern time, you want to pay attention. The second thing, of course, is we got Jay Powell, the head of the Fed. This is not a testimony. It's just a roundtable discussion. I believe he's a keynote speaker or something like that. Remember, the head of the Fed, when he talks, the markets are going to listen. That's our second item on our radar. And really, the third thing, you have earnings coming out tomorrow after the close. We just heard from Microsoft and Alphabet. I won't go into the details what the earnings did. All we care about is how the markets react to those earnings. It doesn't matter what the earnings were. Tomorrow, though, we'll have another round of big earnings after the close. That's our third thing on our radar. And we heard from Israel, the situation happening in Gaza today. Apparently, they delayed the ground invasion into Gaza. We're watching that very closely right now, and I think the headlines out of that are a major wild card here for tomorrow. So new home sales at 10, Jay Powell at 4:35. Shortly after Jay Powell speaks, we'll probably hear from Meta and the rest of the after the close earnings tomorrow, and we're going to keep an eye and ear out tomorrow morning to see if we get more updates of the situation happening in Israel. Now, back to our charts though. Remember, it's important to know when the news is, but as I mentioned earlier, we trade the chart, where the chart never lies. The news is always noise, and the money is made, of course, by trading the chart in front of you. Now, let's go over now my favorite trades here for tomorrow. Let's start tonight first on the E-mini and the SPY. We'll wrap things up, of course, on the NASDAQ and the triple Qs. As I mentioned in the introduction, I believe we're in kind of a tale of two ranges right now. We're currently in a trading range. We know that ranges love to rotate, looking to buy low, sell high, trade reversals, and look for lots of traps. We also know we've got that previous range, and we know, of course, ranges love to break out and pull back. In this case, go back down into that range down below us. So you put them together and you can see there's lots of bull traps right as we go higher, lots of bear traps underneath this trading range. That's why I do believe tomorrow with J Powell in the afternoon, big Meta earnings tomorrow for the close, probably looking at some more traps and hopefully some more easy winning trades for us here tomorrow in our trade room. Let's now drill down into our tick charts. The tick chart, remember, tick charts make everything easier, at least in my eyes. This is a 7,000 tick chart, by the way, if you're watching for the first time right now. That is the 21 EMA as well, in case you're wondering what that moving average is. But what are the tick charts telling us right now? There are two big components or two clues on the tick charts. The first one's this channel. You'll notice that the buyers have definitely got some of their hooks in this right now, right? The bears are definitely shorting off the highs. It's overall bear market. It's definitely expected to see bears at these highs, but you can easily see the market trying to hold on to this channel. So you would think that somewhere around the low of that channel, you would definitely think underneath one of these prior swings, below the low of that channel. If you're taking my free classes right now, you know that oftentimes our best entries in a bullish channel will actually come just a little bit below a channel around a prior swing. So we're using that channel as part of our guide. And you'll notice too, there's a new range right here. We just heard from Microsoft and Google Alphabet. We got that new trading range. If you watched last night's video, what did we talk about? We talked about how ranges love to rotate back and forth. And so we definitely are watching to buy low, sell high. And also too, with this a little bit more bullish tone to the market right now, we can't totally rule out the potential for a breakout. Now that breakout, let's not get too far ahead of ourselves, right? We know we got that big range in the 60-minute up above us. So I definitely think there could be some easy bull traps back into that trading range. We'll talk about that in a lot of detail here in a moment. You put those two together, right? You put them together, right? The range and the bull channel. And I think we got a pretty good game plan, a relatively simple game plan here for tomorrow. Now, first, I want to talk about what we want, right? We want right now is we want to get this rotation back down and start buying off of these lows. There's a bunch of different ways we can look for entries and make some money right off the low of that range and the low of that channel. Later on in the video tonight, I'm going to drill down and talk about some breakouts, some fake out breakouts, some reversals, some bull traps back in as well. You'll notice right away this trading range, I've measured the amount above the range and the amount below the range. In my free video classes, we talk a lot about these, right? They're called pendulum swings. Rotation, right? Pendulum swings are a very important part of range bound markets. So in all reality, although I would love to get that deep pullback down around this area where I think the best entries will be tomorrow for the buyers, we may not get that far. We simply may not get that far. So I want to be open-minded to a shallow pullback. The shallow pullback, the problem with the shallow pullback right now is we really haven't seen any real evidence of a strong break above these key highs, right? A lot of us would call these structure highs. So if I want to buy that pendulum swing and even right around the low of that channel, my concern is I don't want to buy too high. And so because of that, I'm going to buy with a bear trap on a shallow pullback. Now, bear traps are very, very simple. All we do is we wait for the pullback, we wait for the bears to try once, go higher, try twice, and get right underneath that prior swing. This would be what I would call a bear trap. It's a higher high in price and a trap below that low. All right. So again, I'd like to get down in this area, but if I don't, I'm looking for that bear trap on a shallow pullback. Now, just like we talked about last night on the video, if this market ends up racing higher now, where do we think the market wants to go? It's going to want to take out the other side of that range, right? Because ranges love to rotate. As we go higher, I will continue to look for bear traps on the way higher, right? So it's really nothing but bear traps. I mentioned earlier, I think traps are where the money is like you made tomorrow. Bear trap on the shallow pullback, And then again, as we go higher, simple pattern. I have probably 100 examples of those inside our free video classes, right? Most of you guys have taken that already. So think about shallow pullback, right? And those traps on the way going higher. And again, I'm going to talk about how to trade that breakout here in a moment. Now, if we get what I hope we get, we'll get a much deeper pullback. When we get a deeper pullback, I'm not so worried about buying high anymore. I'm more concerned about simply buying in a very strong bear move down. This is where we're going to use what I call a two-try failure, right? A two-try failure. What does that mean? Well, it's kind of like what happened right there and right there, right? We go down, the bears try once to go lower, the bears try twice to go lower, and we basically buy into their stops, right, for a run going higher. Strong run down, bears try once to keep it going, they try twice to keep it going lower, and we look for a run, basically buying into their stops. So remember, this is a horrible spot to be a seller. So if we see bears coming in and trying once and trying twice, now we know, right? Now we know where their stops are. And now we know where their pain is, and we can buy into those stops with, again, what I would call a two-try failure pattern. One try for the bears, two try for the bears, rope them in, and punch it into those stop losses. Now, again, as we rotate higher here now, I don't want to what? I don't want to buy high. And so we start looking for, again, more traps on the way back up to retest those highs. So a lot of failures around the edges, traps as we rotate. You guys know this, right? But wait a second. If you're watching for the first time right now, this might all be brand new to you if you're watching here for the first time right now. But not to worry. I teach all of these entry tactics along with all the principles we use in our trade room. I teach all of this in my free trading classes. What I'll do is I'll put a link up there for you. Upper right-hand corner, grab that link and take that free trading course, because the strategy you're going to learn in that short video series will teach you a remarkably simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, that free video series will teach you my 4 favorite entry patterns. I have hundreds of examples of failures, traps, pullback setups, strength trades, all part of that video series. If you're not making consistent money right now, if you're tired of missing the best trades each day, hit that link up top there, take that free course. You're going to love it. It'll give you a nice, easy roadmap to find more winning trades each week. And also be aware too, if you can't get that link up top there, I'll put all the important links down in the description of the YouTube video, especially my Twitter feed will be down there as well. I post updates throughout the day on Twitter. So hit that link in the top upper right-hand corner or grab the links down in the description of the video and definitely take that free course. You can thank me later on that with some nice winning trades here. Now, one more thing I want to talk about. We're going to talk about the move going higher here in a moment. Don't you worry. There's a lot we're going to cover on the move going higher here. Let's talk about a double bottom reversal, because again, we know we're looking for that shallow pullback trap, right? That's a pretty easy thing. But what if we did this? What if we went down, up, over, and double bottomed, right? That happens a lot, right? Didn't happen today, but let's say we go lower here. We pull up and we roll back over and retest that low. This can really throw a lot of people off because it kind of goes against the game plan. But in all reality, this is usually an easier way to be a buyer right now, because what happens is all the sellers who come in and they sell the bounce, right? It's a bear market overall, right? It's a bear market right now. So it makes sense that sellers may try to short. If this thing runs lower, they may try to run this thing back down to retest the low. So let's put ourselves in the shoes of those sellers. If I was a seller and I sold that bounce, where do you think we'd take our profit on that? Yeah, we would probably take the bulk of that position off around that low, at least 3/4 of the position, right? So is it safe to say that sellers who sold the bounce now become buyers at that low? Absolutely. Is it also safe to say that buyers are probably waiting under that low because, after all, it's a bull channel, right? I mentioned earlier, probably going to have a lot of buyers underneath these swings here. Is it safe to assume that buyers are going to buy low as well? Okay, so in that situation, we have buyers who are buying the low. We have sellers who are selling or who are buying their way out of their positions. Now, why don't we go in and see if we can't trap some rookies in with one of those two-try failures. Remember, we used the two-try rule to get all the stops engaged, right? That gets the bears in, and then we can punch it, basically trap the bears in, and hit their stops, right? The stops are the fuel we need to run this thing back higher. Now think about this scenario. This is one of those situations where my first mentor, my first trading coach over 15, 16 years ago, he would always say, think about an area where everyone's a buyer, right? Everyone's a buyer down there. Why? The buyers are buying low. The sellers who sold the bounce, they're buying their way out. And then once we trap in some we assume these are rookies, right? These aren't professionals down here, right? Rookies don't sell low, right? Rookies don't sell high. They sell low, right? So we assume these are rookies here. Once those rookies get stopped out, everyone is a buyer. These double bottom reversals are some of the easiest ways to make money, right? So keep an eye on that as well. And remember, double tops, same thing, right? We go up, the buyers buy the dip, they take their profit at the high, right? Everyone becomes a seller, right? The bears are selling high. The buyers who got in here, they're selling out of those positions. And then in come the rookies. They try once, they try twice on the faster time frame, the trade room tomorrow morning, and we drop it back down. We go. Everyone's a seller at that double bottom in certain situations, or double top in certain situations, right? So a great chance here right now for, again, shallow pullbacks, deep pullbacks, and of course, some double bottoms here as well. Now, let's talk about the game plan if we go higher, all right? Because, again, like I said earlier, it definitely feels like the buyers have their hooks a bit more into this right now. And, of course, in the 60-minute chart, we have some space to work with, right, overhead here. Why don't we go grab the Nasdaq right now? I feel bad for neglecting the Nasdaq here so long. The Nasdaq is very similar, of course, to the S&P. In fact, everything I mentioned on the S&P can pretty much be applied to the Nasdaq. On the NQ right now, same situation. We're a tale of two trading ranges. The current range we're in right now wants to rotate back and forth. We're going to buy low, sell high, same thing as we talked about on the S&P. And of course, that previous range, right, that breakdown, that pull back. And so the NASDAQ also has potentially some bull traps going higher. We'll cover that here in a moment. And definitely just enough space here right now to warrant a breakout. So let's talk about this and put this game plan together. The NASDAQ is a very interesting scenario on the tick chart as well. You'll see right away the same two components apply. We have this channel, right? That channel right there on the NASDAQ, and we can easily see the market trying to rotate back and forth. As I mentioned earlier, right, we'll look for buys off the low of that channel, and don't forget the swings just underneath those channels are oftentimes where some of the best entries are going to be. One key difference on the NASDAQ is we have a new higher high here after that earnings report came out today, Microsoft and Google, and so now we have a steeper channel. This is a great example of where a bear trap, right, to avoid buying high. This is exactly where a scenario would be to buy as low as you can with that same trap pattern I talked about on the S&P. Because again, we're at the low of the channel, but we're not really breaking above that high with any real conviction yet. So that pattern right there, that trade right there, it's a good one, but it needs to be done carefully, right, with that. Again, when they trap set up, as I mentioned earlier, the goal would be to get underneath that low, trap those bears in, maybe a two-try failure, and then grab that run back up. Or if they do end up whacking it and running back again, 1-2 back up from there. So same game plan we mentioned there on the E-mini, a slightly different look to it, as you can see here. So now what do we do if the market goes higher? right? Market goes higher. First of all, we are not a bull market, okay? Can we all agree on that right now? We're not a bull market overall. We're a bear market right now that has a little bit more of a bullish tone to it right now. So as we go higher here, does that look like a possible double top situation we mentioned earlier? Look at this one from today, right? They run up, they pull back, buyers come in, of course. The buyers want to retest that high. They retest the high, and look how pretty that two-try crown reversal, two-try failure was right off of that high late in the morning here today. We definitely are looking for something like this again here for tomorrow. Just a matter of time, waiting for that setup as we speak. So we got the strong run up. Right, we know as we pull back here, right, trap those bears in, squeeze their stops. Once we go back up now and retest that high now, we are, in the short term, we are very bullish, right? We're pretty bullish in the short term. In the long term, though, we're still pretty bearish, which is why we have the option for a double top. If this was a bull market overall, if the 60-minute time frame was bullish overall, I wouldn't be as keen on this potential short trade. So once we get back up, again, we assume buyers are buying low. We assume they're taking a bunch of their profit off at that high. Now, assuming we don't go through the high, right? There's one type of breakout we'll talk about tonight to basically no guarantee. Oh, well, nothing's guaranteed, but almost guarantee, right? We're going to keep going higher here. But if we run, like over here, right? If we run and take out that high, then all of a sudden we pull back, right? And the buyers are trying, right? Remember, these are rookies. Okay, these are not professional traders, right? Professional traders don't buy high, right? They buy low, they buy down here, right? So we assume these are rookies, tight stops, not much risk tolerance, right? Not much pain threshold. Think about where their exits are. And we're going to use that to fuel, right, that run back down again. And if you learned one thing from today, remember, we have a range right here. Right, there's a range right there. If we end up rolling higher, like today, right, measure the amount above, measure the amount below, and that will probably be up 1, 2, probably going to be your target on the opposite side, right? We're talking about pendulum swings last night on the video. And guys, we have hundreds of examples, right, of how we trade ranges and pendulum swings in that free video course I mentioned in the upper right-hand corner. So you definitely owe it to your trade account balance or your P&L to take that free class up there in the upper right-hand corner. So if they do end up retesting that high, I'm thinking about that double top reversal. And remember, what's the best way to short it as it drops? All right, we're going to grab that failure, but what do you do as the market rotates lower? What's the trade? In this case, it's a bull trap, right? It's a bull trap. What's a bull trap look like? It's a lower low in price and a trap high, right? It's a lower low in price and a trap high. We just conveniently saw one right there today, right? I'm not making this stuff up, right? We run lower low in price and a trap above that high. This is almost a carbon copy example of what we want to see tomorrow up around that high. It's a two-try failure, which again, I call these double top reversals. Then as we're going lower, you want to sell as high as you possibly can because a possible channel down below us here, right? Look for that double top reversal into that bull trap as we rotate off the high here. Now let's talk about a breakout. All right, a breakout. You know, breakouts are possible right now because again we have the bulls appear to have a little bit more evidence of kind of holding onto this. And again, we've got a 60-minute chart with a little bit of space overhead here right now. The most important thing about a breakout, let's get rid of this here just for right now. Just keep kind of clean the chart up a little bit here. If we see a breakout, you want to think about this situation, basically a breakout pullback, right? So we got a range here. This is basically one big trading range. If I see a breakout, I'm thinking about a breakout pullback, right? A breakout pullback. That's how I want to think about it. There are ways to make money on breakout pullbacks on the way up. There's ways to make money shorting it on the pullback. There's ways to buy the dip. And there's ways, of course, as always in a bear market, right, to sell the bounce off of that high. All right. Most of you guys probably know this one already, especially if you're a student of mine in our morning trade room every morning. So as we go higher, if we are seeing, again, if we run into that high and we struggle, we know how to trade that. But if we start ripping and making higher highs in price here, this is where trap patterns are very useful as the market races higher. Remember, strong run up, we clearly and convincingly break above that high. Not like this one, right? Not like that one, right? It's not a convincing break. But if that would have popped up and been convincing break, you would have seen people jump in on that bear trap. So as we go higher, if we go higher here, think about that strong run, a convincing break through structure highs. I want to see that higher high in price, and I want that in this case, that bear trap underneath that low, right? Nice strong green candle closing firmly above the moving average. You guys learned that stuff in our free video course. Now, once we get up into areas of resistance up overhead, once we get pretty high up now we anticipate that pull back. There will usually be a channel, right? Coming off that high, around that low, right? Oftentimes the top of that range, top of that move will act as key areas of support. During that pullback, right? During that pullback, how can I short this thing on the pullback? What's the problem? The problem is momentum, right? A lot of bullish momentum. So I gotta be very careful trying to pick a top, right, on that pullback. This is where a crown reversal comes in handy. Buyers try once, buyers try twice, and we now get that bull trap above the high. You'll notice this is a very select pattern because this is a very bullish situation. So it's a higher high in price with a bear trap going higher, right? It's a lower low in price and that bull trap above that high. I call these crown reversals when they're in this situation, right? Because again, it's a very bullish move in this example. Now we pull back into the top of that range for a breakout pullback. Now we go out and we draw our trend lines off those highs, off that low, and now we've got a very strong run going higher. We expect a pullback and a retest of that high. This is where now that move lower, this is a very easy trade to profit from. The key is wait to trap those bears in. Again, because we're overall bearish, I'll want to see them try twice and then use those stops to punch this thing back up to retest the high. This is the dance. You want to literally memorize this dance during a range breakout. It is a bear trap. Again, after a convincing breakout above that high, it is a crown reversal because again, we are an overall bear market, which is the only reason why I even consider looking to short that pullback. But because we're so bullish in the short-term momentum, remember, it's good to know we're bearish overall, but you can't ignore the short-term momentum in this situation. So use those buyers to get in. We have to use their stops to fuel that drop right off that high. And again, tomorrow morning, I'll be keeping an eye out for a new channel, right? And using that channel for some targets, right, on the way down. And then once we end up pulling back here, now we've got all that momentum now for the bulls. They're trying to go back up and retest the high, trap those rookie sellers in, right, and take them down back up to retest that high. Now, one thing you want to kind of keep in mind is sometimes these moves lower will wind up grinding, right? Again, it's an overall bear market. So if we're lucky enough to get that crown reversal and then we don't get the pullback and the 1-2 back up, right, for a bear trap into a double top, right? If it keeps on grinding down, this could easily happen because again, it's an overall bear market. If it pushes lower and begins to grind down like that, why do you trade it? Trend line off that low, right? Channel off that high, look left, find some prior swings, and don't miss that first test off the high of that channel. All right. Again, it'll be like this. It'll pop up, right? Pop up. It's all about those bear traps on the way up, right? As we make our way way high up, we don't want to buy up here, right? We trap the buyers in with that crown reversal, 2 tries for the buyers, bull trap off it. We pull back. We watch now as it pulls back. Do the bears come in, get trapped for a run back up? right? Or does it continue to grind down? If it grinds down like that, if you're a student of mine, you know the grinders are an easy giveaway. We call these pop and grind moves. I'm going to mark a trend line at the lows. I'm going to bring the channel to highs. And again, look left. Find some prior swings. And I love traps, as you guys can tell, right? It's my favorite word in the dictionary right now, right? I love traps, but this could be any one of the entry patterns, trap pattern, a buyer failure pattern, a pullback combination off that level as well. So if we end up getting whacked up here and the market rolls over and starts grinding down like that, right? That's that pop and grind. That's that pop and grind you want to keep on your radar here for tomorrow, right? So keep that also, that kind of variation on your radar. It's a pretty simple game plan, right? We pop up, looking for bear traps to buy low. We get high up, right? Oftentimes a measured move after that breakout. We trap the buyers in, and then again, it's all about what happens as it dumps. Does it dump and start to grind down? If that case, we whack the top of that channel. Bull trap setup like this one I'm showing you could be a buyer failure, a pullback combo, a possible strength move as we make our way back down into that trading range. All right, guys, this should be a good game plan for tomorrow. I'm sure the markets are going to throw us some curveball tonight or tomorrow morning. So don't forget, tomorrow morning, we'll up the charts and we'll trade this stuff together tomorrow, because I do my best in these videos, kind of anticipate where the best trades will be for tomorrow. But the markets are crazy during earnings season, so don't miss tomorrow morning in our morning trade room, 8 o'clock Eastern time. We'll get together and trade all this stuff together. I can't think of any better way to learn this stuff than come out and trade with us tomorrow morning in our morning trade room. I'll put all the important links for you guys, all the free class links, all the trade room membership links, my Twitter feed. I'll put all that stuff down, the description of the YouTube video. I would definitely recommend start first with the free classes. Get your feet wet there. Learn the basic strategy. I got a lot of examples of trades inside of that video course as well to give you a better understanding of how they work. And sometime soon, hopefully I'll see you sometime soon, trading with us in the morning trade room. Questions, any help getting access, any questions we talk about tonight, don't be a stranger. Megan and I are always here to help out, so don't be afraid to call the office or use live chat. If you're having trouble with anything we talk about tonight, definitely don't be a stranger. All right, guys, so reach out and ask for help if you need it. In the meantime, enjoy the rest of your evening. Get some sleep tonight. Busy day tomorrow. Should be another great day tomorrow morning in our morning trade room. Enjoy your evening. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.